again. And we also had Tech Wabag management joining us on the show right now. It was a strong quarter coming in for the company. At least the PAT saw an uptick of about uptick on a year-on-year basis. We are joined by Mr. Rajneesh Chopra, who's a global head business development at Tech Wabag, joining us this morning. A very good morning to you, Mr. Chopra. Thank you so much for joining us on ET Now. This is Cheryl on the other side, and let's talk about your EBITDA margin. It has been impacted over the last couple of quarters. If you could tell me, is the company facing challenges to pass on the incremental costs, and also what proportion of the orders are fixed price contracts?
Good morning, Cheryl, and thank you so much for having me on the show. I think a very good question to start with. As if you are asking about the escalation part of it, I think most of our contracts are covered on the escalation front. The only challenge is that maybe given the very steep increase in escalation in commodity prices, probably we felt that that was not enough, although we are in dialogue with our customers to get the full compensation, but the contract was allowing around 70 to 80% of the escalation to be mitigated through the contract. That is there, but that was at the peak time. I think going forward, I think the commodity prices have softened a bit. So maybe in coming quarters, that may reflect into our margins.
Very good morning, sir. This is Adira joining in. Pleasure speaking to you on ET Now. Sir, question would be, despite a strong order book, of course, your H1 revenue growth has been muted. Is the company facing any challenges in the international execution?
Good morning, Adiraj. I think, we in the first quarter, as we mentioned earlier also, that we had one of our major orders, which was coming from Russia, which is reflected in our order book. So that was under suspension. But in Q2, that order's execution has resumed. So maybe going forward, as far as international orders are concerned, you will find that the H1 will be much better compared to H2 will be better than what we have reflected in terms of execution in H1. Secondly, one more factor which has been impacting our execution is that earlier there was supply chain disruption because of COVID, and when it just started normalizing, we had these other geopolitical issues which came into play. So because of that, there was this thing, but I think now we are almost there at our pre-COVID level in terms of that. So that's why I'm saying that H2, you will find a much better pace of execution in all our projects. And as our order book indicates, we have a pretty good order book. So it's all a question of conversion over the next 6 months.
If you could, I want to ask about your margin once more, Mr. Chopra. What is the margin differential in the international versus your domestic orders? And if you could tell us how the international order book is looking specifically for Europe and Russia. I know you've touched upon a bit on your order book. If you could talk some more on it.
See, historically, we have always had a better margins and cash flows when it came to international orders. Now, if you look at our current order book, I think more than 50% are international orders. And we have made a shift. We promised our stakeholders that as a company, we will be only focused on profitable growth. So a lot of our contracts in the international market today, they are EP. That is, design, engineering, and procurement. The construction part is not there. So that will definitely result into a better turnaround time, improved margins and cash flows. So this is out of a strategic intent, what we did. Like our Russia order, it was almost around a 1,300 crore order. So it is all engineering and procurement. We got a desal order in Senegal. It is again, our scope is, design, engineering, procurement. So that's a strategic shift which has happened. And I think going forward, you will see the benefits of that reflecting into the margins.
Mr. Chopra, I want to just lastly ask you, what sort of a revenue guidance are you seeing for this full fiscal year? Also margin guidance, if you could help us with that.
See, post-COVID, we have not still given the guidance, but all I can indicate is that H2 will be much better than H1. And probably we are targeting a double-digit growth as far as top line is concerned. As you yourself mentioned, I think we are pretty comfortable with our bottom line growth, and our stakeholders are quite happy about it because we have lived up to our promise of profitable growth, where our bottom line will grow faster than the top line. But we definitely hope that our top line growth will be in a double digit.
And on that optimistic note, we would really like to thank you, Mr. Chopra, for speaking to us here on ET Now about the quarter gone by. And moving on now, stay